Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at two stocks in the conglomerate sector which are traded on the Trinidad and Tobago Stock Exchange, and we're referring to GraceKennedy Limited and Ansa McAl Limited. And both companies for the financial years respectively ended 2018 would have reported improved profits. Ansa McAl up just around 12.4%, and GraceKennedy up a very impressive 20.6%. Let's take a look at some of the factors which should have accounted for that improved performance. And turning first to Ansa McAl, for the year ended, the company, or the group rather, would have reported earnings per share of just around $3.54 per share, a very impressive improvement of 12.4% from the $3.15 per share recorded in the prior comparable period. Revenues were up just around 2.3% from $6.24 to $6.38 billion. Operating profits were up by 6.6% from $990 to just around $1.05 billion. Overall, a lower taxation expense, with the effective tax rate dropping from around 33% in 2017 to just around 29% in 2018, would have led to that bump in profits after taxes, where profits came in at $722 million, just, well, in comparison to that $648 million in 2017, or an 11.4% increase. Now, in terms of the profit before taxes by segment, no major surprises here, but some items to note. Well, manufacturing, packaging and brewing, which usually accounts for roughly half of the group's profit before taxes, increased just around 12%, from $444 million to just around $498 million in red there. There was a very nice rebound in the automotive trading and distribution segment in green, from $125 million in profit before taxes in 2017 to just around $177 million in the 2018 period. Media services and retail continues to struggle. Profit before taxes from that particular segment fell from $89 million to just around $77 million. And insurance area would have led to a decrease in profit before taxes for that particular segment in purple, from $310 million to just around $265 million Trinidad and Tobago dollars. Now, at a price of just around $55.02, Ansa McAl trades at a price to earnings multiple of just around 15.5 times, which is above the sector average of 12.5 times. Its dividend yield, however, is on the higher end at about 3.3%, compared to the sector average of 3.1%. Some of this would be accountable or attributable to that fairly high trailing dividend payout ratio of 50.8%, compared to the sector average, which is just under 39%. So on the basis of improving earnings, but tempered by some fairly above average valuations, Bourse maintains its neutral rating on Ansa McAl. Turning quickly to GraceKennedy Group, GraceKennedy reported earnings per share of just around 27 cents TT dollar equivalent for the 2018 period, which is a 21.6% increase from the reported earnings per share of 22 cents in the 2017 period. Now, revenues were up just around 5.5%, and profit before taxes were up 19.6%. Now, the group did mention that there were particular one-off gains which are not expected to recur in subsequent periods, specifically from the dissolution of some non-operating subsidiaries. And excluding those particular gains, the adjusted net profit would have been just around 4.5% higher, which would lead to an adjusted earnings per share estimate of around a 7.4% increase to just around 21 cents. Now, looking at profits before taxes by segment for Grace, well, usually most of us associate Grace in terms of brand awareness as a food company, food trading, where we think about juices, their seasoning, their pepper sauce, etc. But when we look at the composition of their profit before taxes, it tells a different story. In fact, profit before taxes from the money services, insurance and banking and investment segments account for more than 3/4 of the group's profit before taxes. And food and trading, which admittedly accounts for more than 75% of their revenues, only accounts for around 23% or thereabouts of their profit before taxes. But nonetheless, we can see a nice upward trend. Their money services continues to be or generate the lion's share of their profit before taxes, over 50% in fact. Their food trading, would have increased marginally, as well as their insurance in blue from 30 to 35.7 million TT equivalent. as well as the banking and investment segment in red from $36 to $40 million TT equivalent. In terms of revenue composition, still very heavily weighted towards the Jamaican market. In fact, just around 52% of the group's total revenues are generated from that Jamaican market. And this has been, to their credit, declining in line with their strategy of increasing revenues from the North American and European regions, which has increased from just around 35% to just around 40%, but it seems to have flatlined there over the past 1 or 2 years. Now, at a price of $3.25 on the Trinidad and Tobago Stock Exchange, Grace trades at a price to earnings ratio of just around 12.1 times, which is fairly in line with the sector average of 12.5 times. Not that impressive of a dividend yield of 2.1%, again compared to the sector average of 3.1%, but that could be attributable in part to its fairly low dividend payout ratio of just around 25.8%, meaning for every dollar of earnings it generates, it pays out just around 25 cents in dividends. So on the basis of moderately improving earnings, but tempered by a fairly low dividend yield, Bourse maintains its neutral rating on GraceKennedy Limited. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website for more information on this and other investment topics at bourseinvestment.com. Have yourselves a great week ahead. This has been the Bourse Report.
Many teens and adults have problems with memory, lack of focus, and mental energy. This can result in anxiety and frustration. If you want to keep your brain sharp, use King Gold by